President Trump threatened more tariffs last week, 30% on the EU and Mexico by August 1. Trade policy might be the area where even Republicans are quick to criticize the White House. Tariffs are announced unpredictably. Nobody is clear what the strategy is. And a deal with Trump is only a deal until he decides he wants a new one. It makes it hard for companies to make long-term capital commitments if they can't be sure what the rules will be. Fortunately, energy exports is one area where the administration has been consistent. We want countries to buy more American oil and gas. This has supported stocks of companies involved in exports of liquefied natural gas, an area we've long thought was underappreciated by the market. The pipeline sector is valued for its stable cash flows. LNG export terminals offer some of the best visibility. In a report out last week, Morgan Stanley highlighted many of these positive features. Cheniere, who exports around half our liquefied natural gas, or LNG, has contracted 95% of their liquefaction capacity out through 2030. The company expects to generate $25 in distributable cash flow by then. Morgan Stanley thinks it'll be $26 a share, which is at around an 11% distributable cash flow yield at the current price. We've been invested in Cheniere for years. Another long-term holding is NextDecade. They're not yet exporting any LNG. They're working on their terminal in Brownsville, Texas. The Republican election victory was good for NextDecade. They'd been held up by a court ruling that an environmental study issued by FERC was inadequate. That was the Sierra Club using the legal system to try and block a perfectly good project. Then the Biden permit pause on new export projects cast doubt on NextDecade's ability to grow its capacity, even though its operating margins will improve as the company grows. The permit pause was lifted, and the new environmental study is expected by the end of this month. Climate extremists push impractical solutions, and fortunately they're becoming irrelevant. NextDecade performed well last week as investors digested the positive outlook Morgan Stanley's report was the near-term catalyst. If you haven't looked at LNG stocks recently, it might be a good time to see if they belong in your portfolio. It's an area with plenty of growth and one that we believe remains attractively priced. If you're interested in learning more about the energy sector and interest rates, then don't forget to subscribe and follow us on LinkedIn and Twitter. Our handles are in the description box below. To find out more about what we're thinking, you can sign up for our twice-weekly blog at sl-advisors.com. If you have any questions you'd like answered in this video, then please leave them down below. I'm Simon Lack. Thank you for watching this video.